Selling your rental properties is not the end of your wealth building journey. It might actually be the smartest move that you can make in 2025. I recently made a YouTube video explaining that I was selling my entire portfolio of rental properties and it went YouTube viral. I got lots of comments and lots of you asked me, okay Rachel, but then what happens next? Where does the money go and what do you actually do after selling? So let's dive in. If you saw that video, you'll know that we sold all of our rental properties. Since then, I have had hundreds of questions in the comment section and in my DMs. Some of them were very technical questions and some of them were very emotional. Today, I'm going to answer both because selling a property doesn't mean your wealth building journey ends. It just means you're choosing a different route. The big issue for landlords right now is Section 24, which is changes in the tax law that started in 2017, which stopped landlords from claiming full tax relief on their mortgage interest. Before that, you could actually deduct your mortgage costs before calculating your profit and before calculating your tax, but now you can't, which means that lots of landlords are paying tax on income they've actually never really received in cash. If we add that to new levies, these are extra charges or taxes that keep being suggested on property ownership, like additional stamp duty or local council tax surcharges, as well as all of the tax rumours that we have in today's landscape, things like wealth taxes or higher capital gains tax rates. Even if they never come in, that uncertainty makes planning very hard for landlords. So landlords like us feel trapped. And on top of the financial side, managing tenants, chasing rent, sorting repairs, it basically becomes a part-time job. And if you're like me, you reach a point where you think, is this actually the best use of my money and my time? So Hayley asked a question on Instagram, which was, what do you actually do with the money once your rental properties are sold? So for lots of people, when they sell, you've got capital, which just means a lump sum of cash left after all of the mortgage is cleared. The estate agent is paid and all of your taxes are covered. What lots of people do once they've sold a rental property is look to put that capital either back into a company reinvestment. So if you own a business, you can put money into that. For example, using it to grow your company often brings a better return than a rental property. And the bonus is that when you invest in your own company, the money is usually more flexible, more liquid, and in control. The second option is a pension. So these are long-term saving pots for your retirement. The huge benefit is that contributions into pensions often qualify for quite high levels of tax relief, meaning that the government effectively tops up what you put in, and it is quite tax effective. The third option is ISAs, so that stands for individual savings accounts, and these are investments or savings accounts where any growth, like interest or investment gains, is completely tax-free. A fourth option that we see in our accounting firm is unit trusts, which might sound a bit intimidating, but they're actually just pooled investment funds. So instead of buying individual company shares yourself, you can actually buy into a bigger basket that is managed by professionals, which gives you diversification and means your money is spread out, which lowers the risk compared to just one or two investments. The key here is that you don't just sell and then sit on a pile of cash. This sale can very often give you freedom to align that money with your real lifestyle and financial goals. I'm now going to tackle some of the questions that were left in the comment section of that video. The first one being, Rachel, as an accountant, why did you even buy a property in your personal name? Section 24 came back in 2017. This is a good time to mention that a lot of the comments on that video were actually quite critical of James and I buying it in our personal name. And so to set the scene, at the time, our intention was to never sell the properties. We wanted to buy them in our own name so that we could hand them down to our children in the future. And remember, Section 24 was actually phased in gradually, and none of us had a crystal ball to predict how this would impact us years later. The next question was, would you still have sold if you'd bought them in a limited company? A quick explainer of this. So when you buy through a limited company, the mortgage interest we have different rules on whether or how much of that is deductible. So Section 24 doesn't bite as hard, but companies come with their own costs, their own admin. Would I still have sold if we'd gone down that route? Maybe not. But I think for us, the really big change that happened is that our time became way more valuable. So at the point that we bought the properties, we did have the time to invest in managing the properties ourselves. But 5 years later, we're running a business, like our time is worth thousands of pounds per hour. It becomes actually really hard to manage it in an impactful way. The next question was it worth it from a time and return on investment perspective? So basically, have you got back what you put in versus anything else. For me, the return in cash was decent, but the return in time and peace of mind was not. And actually, again, as I've just mentioned, that was the main reason that we sold it. And to be honest, for the era of life that James and I are in right now, that is priceless and is worth a lot of money to us. Next question is, did the levy threats or wealth tax rumours play into your decision? And the short answer is yes, they did. Even just rumours of extra taxes, changes in stamp duty, very often just challenge you to rethink whether or not the risks are worth it and if there's going to be a payoff. Another question we got was, did you sell with tenants in or empty? And the answer was empty. And even then the process still took a long time. So for us, making sure our tenants were like very well looked after was really important to us. So we actually gave them indefinite time to find somewhere new, and then we sold. I've done some questions, but I think it would be really cool here to zoom out. So there are constant conversations about council tax changes, adding premiums, second homes, or empty properties. We're constantly having questions around capital gains tax reforms, which is the tax on profits that you make when you sell an asset like a property. And right now it's currently lower than income tax, but there are rumours of it increasing. We then also have rumours of wealth taxes being involved, which would be a new tax on people's overall assets, not just their income. Even if none of these happen, it brings a lot of uncertainty that can make landlords very nervous. And so selling now is actually a strategic decision for lots of people. The most common question I got across all platforms was it worth it? And I think for James and I, it was. Selling wasn't the end of this journey. It was actually just a pivot into wealth building in a different way that aligns with the values and how much time we have available at the moment. So instead of managing tenants and repairs, we're putting our energy back into the business, into other investments that give us more time freedom and more time with our personal lives and our family. So to me, that's success. Not just building wealth, but building a life that feels good and is a really good investment in the time and the energy that we're doing that. If you enjoyed this conversation, if you enjoy seeing the behind the scenes of what it's like building a business, having these investments and everything else, you will probably also love the Practice Owners podcast, which is where I go behind the scenes on what it's really like to run an accounting firm, the decisions, the systems, the mistakes, the wins, everything behind the scenes. So if you want more of the raw, unfiltered side of building a business and making money work smarter for you, head over and check it out. I will make sure there is a link in the description of this video for you to listen after this video. If you missed the story and that viral video of why we sold our rental properties in the first place, that is the perfect next video for you. I'll pop a sticker on screen now where you can watch that, and then head over to the podcast for real behind the scenes conversations.